Hey, Rent Retirement Community, Zachary Master here. I want to go through a PowerPoint presentation that I have recently given to a few different groups that I speak to and we work with on a regular basis. And we prepared the slide deck just of some general information about myself and our company and like what we do kind of on a ground level. And I realized like I haven't actually presented this to our community in general and Academy members. And I thought that, this would be a great way just to get a baseline understanding of rent to retirement, like in our background. And so sometimes we get too deep into different aspects of real estate investing and different things like this. I need to take some time to talk about the big picture. So let me present this slide deck on just a little bit of who Rent to Retirement is, what we do, and go through some kind of big picture items that might help to fill in some gaps for you on like who we are and what we do, especially if you're new to learning about turnkey investing and rent retirement in general. The benefits of turnkey investing with rent retirement and how to create a sustainable portfolio to achieve early retirement. So just some background about myself, if you're unfamiliar of kind of like what led me into real estate, and you haven't listened to some of our podcasts. So I am an Air Force veteran and started my career path in optometry. My wife and I are both optometrists by education. We retired early in our career paths from optometry through real estate investing. This didn't happen overnight, but it did happen within a few short years of dedicated intentional investing. Specifically, the big thing that allowed us to really expedite our investing success was starting to invest intentionally in different locations, just outside of our local market where we found better opportunity. That took time to build our systems and teams and find out how to do market analysis in these different areas, but investing out of state in different locations where we saw the best opportunity allowed us to expedite our investing success, achieve better returns, and ultimately led to the ability for us to create financial independence early in life, which of course we know is the foundation of this business to help other people accomplish the same thing. So I practiced optometry for 7 years in the Air Force. I worked in private practice for a few years before completely exiting optometry altogether. We still operate in a volunteer basis as we do some humanitarian missions because I love helping people see. I never hated my job. But I certainly wanted to do more for my family and spend more time with my family versus being reliant on that career path. And so that's our goal at Rent to Retirement, is to help people achieve financial independence through real estate investing, strategically investing in turnkey properties throughout the best markets in the US, where you're not having to buy yourself another job investing in real estate. I'm also a broker in multiple states. And at this point, a professional investor. This is what I do as a profession. And I love it. I love helping people accomplish the same thing. We invest in single family. This is single family long-term rentals. We also have short-term rentals. This is both us personally as well as the company Rent to Retirement. We work in multifamily. That's mainly small multifamily, like 2 to 4 units. We have some larger multifamily stuff. We work in commercial. This is commercial, medical, and retail. This is sometimes in Rent to Retirement, you'll have commercial details available that's usually made available as you grow your portfolio. We always want to start people on residential investing. And then we do new construction. A big part of what our initiative has been over the past few years at Rent to Retirement is to get more into the build to rent space, because there's all sorts of benefits being in new construction, especially if you're in a growth market. You just get better appreciation and better rental growth, less maintenance and variability. However, new construction does take more money to acquire. So it's not always the right starting point, but I think at some point it's important for people to consider new construction. So experience, we've done over 3,000 deals over the past 10 years. I mean, really, this is closer to the past 15 years at this point. And we've participated in over 500 million in transactions. And some of those are our own properties, some with investors. And I speak consistently in front of audiences about how to build businesses in real estate, about real estate investing in general. And of course, I put all my effort into our Rent to Retirement community that we've built to give you the most information to allow you to be successful over time. And really this is not a bragging point, but this is just to show you this is possible. Over in less than 10 years investing, I've been investing more than 10 years now, but I just want to say in less than 8 years of intentional investing, I was able to create a 7-figure passive income stream. This is not owning 7 figures of real estate. This is not 7 figures of gross income. This is 7 figures of net income annually that our properties produce. I never thought that would have been possible many years ago. And I never thought that we would have been in that position when we just bought the first house we bought was a duplex, started there, house hacked it. Next year, bought 2 more houses. Next year, bought 3 more houses. So it was a slow progression. but I just want to point that out. Like, this is possible. If you just stay the course of investing, you can fairly quickly replace your active income and reach financial goals that you maybe didn't think otherwise. But it doesn't happen overnight. It does take work, and it does take some intention. So that's just a little bit about myself and my history investing in real estate and kind of the philosophy behind rent to retirement. So I think most of you are familiar with real estate in general, at least the turnkey aspect. So I'll kind of breeze through these next few slides just to talk a little bit more about our business and what we do. And my goal is to allow you to have a better understanding of myself and our company and like what we do, and just to make sure that you're familiar with all the things that we have to offer you, regardless of you, if you invest with us or not. Our goal, and my team, I hit this point home with my team, is that our goal is to add value to every single person, however we can, to allow you to bring your investing to the next level. And that's why we put out so much content that we do. So I'm really serious about that. I guarantee if you follow us on social media or you follow some of the podcasts, like, you'll learn something that will allow you to be a better investor. So why is it important to build a portfolio diversified across multiple markets and asset classes? This is something that I think is really important to diversify your portfolio over time. And often I think as we first start investing, myself included, we think about the local market that we invest in as being an area where we feel confident about investing in our local market because we know it, and we feel comfortable investing in that area. However, it's very likely that there's another market out there, or multiple other markets that have a better return on investment and allow you to take your investing to the next level and have, are more congruent with your goals. And from just a standard diversification standpoint, it's probably a good thing to be invested across multiple markets. The challenge is, it's like, if you're just starting out investing or you're entering into a new market, like, how do you research that market? How do you build your teams in those areas? Sometimes we've had to go through, multiple bad property managers or contractors before we find a good one. So at least through the rent to retirement system, we've already paved that path for you. We've already networked with the right people in that area that we're confident with, that we have a proven track record with, that we're monitoring their progress. And we make that available to our community to hopefully expedite your success, so you can achieve the best financial returns on investments by having access to the best investment locations, but not having to go through all the obstacles and the challenges that we experience investing in these new areas and making these mistakes and losing money on some deals and finding the right people to work with. But from a portfolio standpoint, it's very important to invest in multiple locations because that gives you diversification, which is important. Like, you can be hyper invested in real estate, and like for us, we only invest in real estate, but we're very diversified across different locations, different asset classes, and I think that gives us stability in our investing. And it's important just to think about, like, no one knows the future. And sometimes if you've listened to us, we talk about the lottery property concept, where, hey, if you bought 10 properties in, say, a couple, 2 or 3 different locations, the majority of those properties are probably going to operate as expected, above or below the line of average, right? And then you'll have 1 or 2 properties that underperform, and maybe it's a tenant issue or whatever. That's just statistics. Then you'll have 1 or 2 properties that far exceed your expectations in terms of performance. Sometimes we refer to those as lottery ticket properties, where, hey, you're in a market that just so happens to like really take off over the next 10 years and you didn't anticipate that. But now you have, 7 figures net worth just by buying a property in the right area that you didn't know was going to take off. That's the power of real estate. But you can only get there if you just buy properties and hold on to them, right? And it only takes 1 or 2 lottery ticket properties to make a dramatic difference. Now, we don't invest, like, that's not the reason to invest. The reason to invest in real estate is to build a passive income portfolio through the fundamentals of real estate investing that can allow you to have financial independence and grow your net worth. But sometimes that is important to recognize, like, that stuff happens. Okay, so other reasons to really pay attention to, like, why to diversify in different markets. The economy is changing. Diversity is key. And really, from a sustainability standpoint, like, being in different locations is really important. We know that successful investors, like, success leaves clues and breadcrumbs. And successful investors are always diversified across multiple markets, ourselves included in that. So why invest in residential real estate? Now, we invest a lot now at this point in our investing career in commercial and retail and medical and a little bit in industrial. But residential is the most predictable path, okay? Because you're investing in a human necessity. People need a place to live. And when you can invest in an area that has its supply and demand, has an undersupply of housing and a strong demand for housing, then you are going to set yourself up for long-term success to have a property that you can constantly keep leased out, that you can have a tenant in there that's paying rent, have rents increase year after year, that and have also market appreciation just based on demand. So investing in residential real estate, your bread and butter housing opportunities, that is predictable. There's a reason there's more millionaires made in real estate than any other asset class. It's assumed that over 90% of people that are millionaires made their wealth in real estate. It's just a predictable path to follow. Real estate is one of the oldest investing avenues known to man because it's human necessity, housing. That's why investing in residential real estate is important to start with. As you grow your portfolio, maybe you do want to be one of these investors that really grows your portfolio and starts to invest in other asset classes like commercial and some of these other things, larger multifamily. But bread and butter, single family, residential real estate is a great place to start. That's where most people do start. That's where we recommend starting. It's very predictable and sustainable. And we're not talking about luxury housing. We're talking about your bread and butter, median house price point. We're going to get a good quality tenant and have consistent cash flow and growth in your property value over time. So rentals offer predictable cash flow, stood the test of time in all market conditions. It's a necessity. Affordable prices allowing for more property acquisition. So this is specifically talking about single family. Like single family is a great place to start because you have the best financing options. You got to put 20% down to buy it or potentially even less, right? Whereas multifamily or commercial, you need to put significantly more money down. It takes more money to buy those. You get more sustainability and predictability in cash flow in single family. You get better appreciation, longer occupancy times with tenants, but also it's very accessible. It's very liquid. You can sell your single family to a retail buyer when you exit it, or you can sell it to an investor if the cash flow makes sense. So we really like growing the single family house portfolio to scale your portfolio over time. So a lot of benefits, especially in the build to rent space. You can use single family short or long-term rentals depending on the location you're in. And this is something where we recommend starting your portfolio in single family and small multi to grow it from there. All right, let's talk about like what turnkey is. Turnkey is a buzzword first and foremost, and that's all it is. And so when you hear turnkey, you got to understand like who's saying turnkey. What we mean when we say turnkey is a property that's been fully renovated or newly built, leased, and professionally managed by teams that we've specifically chosen to work with in these areas or built in a market that we know will be set up for success long-term. We'll talk about how we choose markets here in the next slide and why we choose locations that we do, but it's a property that really is going to be taken care of for you, right? So you have the financial benefits of property ownership. You get access to invest in the best locations throughout the US without having to be a landlord. That's the downside. That's the negative to real estate investing is the challenges. Now you're still a property owner. So, I mean, if a tenant stops paying rent, you're not receiving income. If you got to evict them, like we're going to, the managerial team is going to do that for you, but you still may have some participation in that process. But generally speaking, turnkey allows you the financial benefits to own real estate without having to do everything on your own and opens up the ability to invest in multiple locations. At rent or retirement, we take it a step further. Like that's kind of turnkey on the surface. But when we talk about turnkey, this is more about like our business specifically. We want to offer that white glove service where we assist you not only in, identifying the best locations where we've established these teams and owning properties where it's all taken care of for you, but also going in and helping you build, a business. When you're investing in real estate, this is a business. And helping you build a portfolio that's going to last generations that you can pass on to your future heirs. So, there's a lot of things that go into building a successful investment portfolio, having the right tax and legal structure in place, having the right, CPA and real estate professionals to help you on, the right lenders and to have the right financing and things like that. So we have built that network just over time to allow ourselves to be successful. And we provide that to our community to allow you to immediately tap into that network. And we help coach you through that, right? That's what we do. We help coach you through how to build a successful business model investing in real estate to create financial independence based on your goals and your criteria and timeline. Who is Turnkey right for? So Turnkey is right for, really anyone that wants to be somewhat passive in their investing. I always take time to say this is not like 100% passive. Just know that. I don't believe there's such a thing as true passive income because you should always be monitoring your money and your money's performance. But as far as in the real estate ways of investing in different areas you can invest in real estate, this is a more passive way where things are set up for you. So anyone who's first getting started to investing in real estate, if you just need some hand holding, and this is your first property, or this is your first property in a new market, or you simply just need some assistance in easily diversifying into a new market, Turnkey is an excellent way to tap into an immediate team available to help you. Turnkey is a great way for people to scale and diversify across other markets. We have a lot of full-time investors that just buy with us to help grow their portfolio quicker. This is something that if you need additional tax benefits or something like this, and regardless of the investing you're already doing, if you just want to own more real estate where you don't have to think about it and things are set up for you, that's a great way to invest in real estate. We have a lot of professionals, people that are whatever the case is, doctors, attorneys, or engineers, or people that they love their W-2 income. They also like real estate, and they understand it's financially advantageous for them to own real estate, but they don't want to be creating another day job, right? Another job that they have to take more time away from their family. The idea is to still work in their profession, maybe even reduce some hours, but ideally be able to buy their time back. And so this is a way for them to own rental real estate. Also, people that live in expensive markets. Like if your local market is just too expensive, like your average rental property is $1 million or $600,000, like it's going to take a significant amount of money just to buy one rental property that may or may not be positive cash flow. Turnkey through our network is a great way to tap into more affordable markets that cash flow better and still have strong appreciation. Like in the Southeast, in the Sun Belt, where there's population moving, that's a perfect example where you can get into when you look at national averages, a property well below the national average for $200,000 to $300,000, where you're putting $30,000 or $40,000 or possibly less down on an investment property that's going to be producing $1,000 a month cash flow or something like this, property dependent. So it is a way to just tap into markets outside of your local area that either fit your goals better or offer better returns. So a little bit about rent to retirement. I mentioned this previously in our discussion, but our goal is to assist you in building a sustainable and diversified portfolio with established teams in the best markets throughout the U.S. We want to make the best real estate opportunities in the U.S. accessible to everyone. Simply put, that is our goal. That is our mission statement, and something that we want to make available. And in a setting, not only make it available to everyone, but make it available in a setting where we're going to expedite your success or put you at the highest chance of success by having all the teams and systems already in place. So we, as mentioned previously, we operate in single family, multifamily. We have commercial and new build properties available across multiple different markets. We strategically choose areas that maximize cash flow, appreciation, and equity, because we know those are the things that help to build wealth over time. And we still will talk about the markets and what determines a market that we want to focus on. And we have a comprehensive team in each one of these locations to handle everything you need, from property insurance to financing and accounting, property management, all the things that come alongside. So, all right, how do we choose markets? As we mentioned, we want to be in areas where we have cash flow, but also growth. So we want to be in areas that what we call are in the path of progress, areas that have population and economic growth, areas where new jobs are being created, where these Fortune 500 companies are coming in. We want to be in areas where you have a strong economy that's diversified across multiple different industries, not just a location that is dependent on, say, like one sectoral industry like oil or gas or government. That can change. And so we want to be in an area that has a diversity of economy where things are growing, new jobs are being created, new companies are establishing a presence. We want to be in areas that have affordability. This is really important. So there's a reason we work in the Midwest and the Southeast. These are areas where the average house price point is below the median average. Median average right now is, I think, $437,000 for the average single family house. So we want to be below that point, but we also want to be in areas where rents are higher than the national average, and tenant demographics in terms of average income are higher than national average. So these are areas where the local economy is affordable, it's thriving, it's growing, people are moving to the area, jobs are created, and people can afford where they're living, and we can actually cash flow on the house. That's the biggest thing. The rent to price ratio is in a setting where we can actually cash flow. Those are some of the things we look at, in addition to being in areas where the national unemployment or the unemployment rate for this area is below the national average as well. We want to be in areas where there's landlord-friendly legislation. So you want to be able to evict a tenant quickly if you need to and charge things back to the tenant where you have control in the lease. Areas where you have low taxes. A lot of the states we work in have low property tax and no state income tax. These may not be things you think about when you first are deciding a market to invest in, and that's okay. But let me tell you, looking back over owning multiple properties across multiple different states, like these things matter, big picture. And these are things that are going to set you up for success long-term in building a rental portfolio. So we want to be in areas that will cash flow well, and set you up for success and have long-term growth potential. That's how you create generational wealth long-term. When we talk about, you hear about location, that means a lot of different things. But in choosing the right, if you boil this down fundamentally, I'm going through a lot today, but I don't want to overwhelm you and complicate things. Real estate investing is not rocket science. Don't overcomplicate it. All these things I'm mentioning, like we've already done this research for you. So we're going to walk you through your goals on how to be successful investing in locations that meet those goals. But fundamentally speaking, if you want to be successful investing in real estate long-term, you invest in a good location that's growing and you have the right people in place. That's it. You don't need to overcomplicate it. And likely, you're going to be investing in a lot of these different locations. And so you have diversification. So that is the recipe to success, you guys, long-term. How does rent retirement assist you in building a sustainable business model? We already mentioned this, I think adequately throughout the presentation here, but our goal is to help you build a business plan and investing plan based on your individual goals and match that with fundamentals of real estate investing that we know has a proven path to success long-term. And we don't charge you anything for that. Okay. You can go through our academy if you want for some additional education, which again is paid back if you end up investing with us, because our goal is to get you to invest, which is what we're here for. We get paid, we earn money through the real estate transaction just as builders would and contractors. So it's built into the property. So know that. And as long as the property cash flow and investment makes sense for you, it can be a win-win for everyone, right? But we don't charge you for coaching and mentorship, just normally going through the process here. So that's something to be to recognize. There's a lot of people out there that will charge you tens of thousands of dollars. I've seen some coaching programs in the six figures to, pretty much do the same thing we're doing. So enough about us, but we want to essentially set you up for success based on your individual goals, criteria, timeline, and resources. And that's different for every single person. And you get to tap into our network of professionals that will set you up for success long-term, having the right CPA and the right attorney that are real estate specific, that understand how to file tax returns in different states, that understand how to maximize the tax benefits and actually file things like depreciation. That is dramatically important, having those people that are investors themselves. And so you get immediate access to this network that we've created over the past decade plus of professionals, property managers, a variety of different lenders. If you can qualify for a conventional loan, or if you're investing through a self-directed IRA or solo 401k, if you're, if you can't qualify for normal lending, if you're a foreign national, and you're, on visa, or just not even a U.S. citizen, and what financing options do you have? We have those available for you as you grow your portfolio and go through a 1031 exchange or maybe cost segregation as you get into more tax things that we coach you through over time. Don't worry about understanding that now, but over time you will need to. And so you'll need those people to help you through those scenarios of maximizing your tax benefits and strategically growing your portfolio, because that is the number one thing that allows you to grow wealth in real estate, is buying real estate, letting it grow in equity, let the cash flow increase year after year as rents increase, and then at some point trading in that property or that equity, either selling that property and 1031ing it or taking out that equity and buying more real estate. And you get this compounding effect, which gives you additional tax benefits. This is where you get this snowball of, like, every property that you buy is an additional stream of income for you, producing more cash flow. It's more tax benefits for you, which gives you a larger tax deduction, and it gives you more equity that you can then take that equity and reinvest in more properties in the future. It's cool just to get to the point where you get this hockey stick growth in your rental portfolio, where your properties are buying properties. But it doesn't happen overnight. It happens over many years of investing intentionally, and it starts slow, and that's okay. Your first 1 to 2 properties, just get them done, let real estate do what it does over time, and you will be able to scale and grow your portfolio. You just got to stay the path. So let's talk about our process at Rent to Retirement, at least when you're investing with us. The path that we follow is typically the first thing we want to do is have a investment consultation with one of our investment strategists. We really just talk about, your goals, your criteria, learn about your financial situation, and ultimately, what are you trying to accomplish in 3, 6, 12 months? What does the next 5 and 10 years look like? What's your why behind what you're doing? Like, we want to take the time to, before we look at any investments or markets, take a step back, understand who you are and what you want to accomplish, because that will allow us to best advise you on the best path forward. So we want to do an investment consultation with our team, and that's ongoing. That's not just a one-time thing. We don't charge you anything for this. Like, we want to build relationships with people. Please understand, we want you to be successful. It is financially advantageous for us for you to be successful. So our goals are aligned here, and we can partner together, because if you're successful, you're going to tell other people about us that will come and invest with us, and you yourself are going to come back to buy more rental properties. No one here is in the business of buying just one rental property. That's not going to give you financial independence, maybe over 20 or 30 years. But if you're trying to create financial independence sooner, as most everyone is, like, it's going to require multiple properties. So just understand, our goals are aligned. We want you to be successful, and we have the best reputation, really, in the real estate space. Quite honestly, of any company that's even remotely close to ours, turnkey or otherwise, we have the best public reputation. That I say that confidently because I've earned it over many years. And if you read some of those reviews we have online, or listen to people that have invested with us, not everything goes perfect. Like, we'll hit obstacles, you guys, but we're here with you when you do hit obstacles, when you encounter those issues. And we really do care about your success. I don't have to be in this business doing what we're doing, but I am, because it's rewarding for me to share my knowledge with other people and see their successes time and time again. And I absolutely love that. It does take work, but it's really cool to see people accomplish their goals, often accomplish their goals quicker than they would otherwise without us in the picture. And then I know we're truly adding value. So anyways, have a free consultation with our team, learn about your investment goals, give you some homework. Usually that is you figuring out your financing section first, if you're going to be using leverage, which we encourage you to probably consider, because leverage is very powerful, allows you to stretch your capital further. Instead of buying one property that's $100,000 and buying it for $100K, you could buy 5 properties with 20% down, and then look at how each one of those properties grows in rent and equity over time. So the first thing we do is hear about your goals, have that consultation, give you some homework, and then we want to continue to have those discussions with you to basically identify, after you have your financing figured out, identify the right market and investment options that are congruent with your goals. And then it's just a matter of going to contract on those. This is a normal real estate transaction. You are buying an investment property that fits your goals with our team's assistance. You put it under contract, you go through normal due diligence. When we talk about due diligence, this is having a property inspection, having, an appraisal with your lender, making sure you have free and clear title, and having the title company go through appropriate title work, making sure the property is priced appropriately with the appraisal, and that the property is in the condition that you expect prior to closing on it based on the inspection report. There's always things that come back on the inspection report, but that doesn't mean you're buying it as is. You work with your investment strategist to come with a list of things that you want repaired from that inspection report, and then you turn that back into the builder or contractor to make sure that they fix those things prior to closing. That way, that you're buying a property. If you never see the property, you never visit the location, as most people do. Most people are buying sight unseen, and that's okay as long as you're going through the normal due diligence. So that's part of going through that process, to make sure you have all these third-party checks and balances to understand what you're buying. And then, of course, we've educated you on the market already, and you've seen some numbers with that. But make sure that the property is what you expect before you actually close on it. This is a normal real estate transaction, you guys, and you have due diligence. Just understand, when you sign a contract on a property, you're just making a commitment to move towards the next steps of potentially buying that property. You're not buying that property that day. You're not closing it, in 24 hours. You're reserving that property and making a commitment to go through the next steps of checking all the boxes. And then, if all the boxes are checked, if and only then do you actually close on the property and own it. But that's a long process. That's 30 to 45 days of due diligence. And the lender and the title company, they're partners in this, especially the lender. They're putting up 80% of the money in the deal. So they're going to make sure the property meets their standards as well. They're not just lending money on anything. So that's pretty much the process. Once you actually close on the property, then we get you set up with property management, where you want to make sure, and you don't have to work with our property management teams. Most people do, but even if you have issues with them or don't want to work with them, we have other recommendations for you. This is going to be your property management team, so it's important to build real relationship with them, understand their contracts and fee structures. And so after you close, then you get set up with property management, sign a managerial agreement. They usually start leasing the property out. Most properties are not rented by the time you close on them, especially if they're new construction. There's just been no leasing time. You usually are closing shortly after the property is actually built. But it's important to, connect with property management and start leasing the property and getting it rented out rather quickly to reduce your vacancy. And then from there, after you're all set up with your property management team, you can just take a step back and take a breather and pat yourself on the back for going through the investment process, maybe reflecting on the things that you've learned. But at that point, it's really just making sure your property is optimized, making sure you have the right bank account set up. We recommend having a separate bank account. You don't want to commingle your funds with your real estate investment. Do you need an LLC set up? Usually it's important to consider an LLC, and that's recommended. Maybe if not immediately, certainly at some point in your investment career, as you grow your portfolio, you need to have an LLC set up, and that is important to do that. So we work with you on all those things, after you've closed on the deal. We can talk about them before if you'd like to, but we understand the timing. Usually the first thing to do is let's find a deal that meets your goals. Let's establish your goals. Let's find a deal that meets your goals. Let's get your financing options in place. Let's put that property under contract. Let's go through the due diligence. Let's close on the property, get it set up with management, which we have all these steps figured out for you. You just got to go through them with us. And then let's optimize your portfolio, make sure your business is set up the way you need it to be with LLC, make sure you have the right accountant and CPA and things like this on. And then as you grow your portfolio, we'll explore other things like higher level tax benefits and strategies. And, those are higher level conversations we work through with you when the time is appropriate. And a lot of this is self-led. So please understand, we're not going to bug you saying every week, hey, we need to have this conversation about this at this point in time. We'll be checking in with you. But really, if you want to talk about a subject, you need to be proactively reaching out and say, schedule with your investment strategist and say, I want to talk about, cost segregation study. I want to talk about 1031. I want to talk about the next market, creative financing options, partnerships, and how to partner with people appropriately. Or how can I invest through my IRA? These are solo 401k. How do I do these things? You got to proactively reach out so we can schedule the time to go through those with you. Outside of the academy, we don't have a real systematic approach because each person is so individualistic. And we also don't want to bug you and be overwhelming. So this is really a self-led endeavor that you have to take initiative on. And we're here to hold your hand through the process and lead you to water, but we can't make you drink. So you really need to have that entrepreneurial spirit to make investment decisions and then follow up as you need assistance. Couple examples on properties. I won't spend a lot of time on this because, you can easily go to our website, and these are actually outdated at this point in time. So, you can look on our inventory and see current examples. This is just a property example in the Midwest where, it's $134,000 B-class house. This would be your typical bread and butter rental. So, you only needed $27,000 down to buy this property to get $234 a month in cash flow. This is after all expenses and your debt service, so your mortgage expense. So, that's a 15% cash on cash return. That's pretty attractive. This is your bread and butter rental property, guys. This isn't anything fancy, maybe not something you would even live in, but this is just a bread and butter rental property in a good location that is going to produce positive cash flow, let the tenant pay the loan down over time, give you tax benefits, and appreciate over time in value as all real estate does. So just single family house, bread and butter, leased out in 17 days. The full pro forma, you can see, I don't know if we have that on here, an example of a Midwestern property where you can buy it with less than 30K down. This is fully renovated. So this isn't a new construction, but it was fully renovated. And then we'll talk about build to rent properties a little bit. So a lot of what we do is new construction. We do about 50-50 build to rent, new construction at this point in time, and highly recommend new construction for someone that's just getting started or has a capital that can purchase new construction, because it's just, I think new construction, the pros of it is that as outlined here, you usually get into a property that long-term will just be more advantageous for you owning your portfolio. It's less maintenance, both initially and long-term. You have builder warranties in place where you literally have pretty much no maintenance for the first year with the builder warranty, but also things like foundation, you have a 10-year, whatever the case is, structural warranty on mechanicals and things like this. So it's just less maintenance. You usually attract better quality tenants. Now, it is more expensive. New construction is usually more expensive, so it means more money down, and really not everyone can afford new construction to begin with. So maybe that's okay. Maybe we start with the previous property here that at 134K to start, and maybe you grow your equity through this and then parlay it into new construction, or as you explore some other options. So it really is to each their own, depending on your investment goals and your resources at this point in time. Also, new construction usually has lower cash on cash ROI. Usually cash flows less because it's more expensive, but it is more predictable, and it will have more appreciation both in rents and market value long term. And so usually if you compare new construction property to the previous Midwestern property I just showed at 134, like 20 years later, 10 or 20 years later, the new construction property is going to be renting for more. It's going to be worth a lot more. So that's why we do like new construction, more predictability. And you probably wouldn't have had to make as many like repairs on roof and things like this throughout the life of your ownership with investing. Most people own properties, we see with our investors, no more than really 3 to 6 years, because they've built equity through appreciation and the debt reduction, where they're taking that property and they're doing a 1031 exchange where they can actually sell one property and use the equity they've built and turn it into 2 or 3 more rentals without investing any more capital. That's a great way to scale your portfolio, where now you've just tripled your income on properties and tripled your portfolio size just by letting real estate do what it does over time, and then reinvesting your equity without injecting any more capital, without investing any more capital. And let's say you wait another 3 or 4 or 5 years and then do the same thing and turn 3 into 9, and you really would have grown your portfolio dramatically at that point in time. Now imagine if you buy 5 properties in year 1 and turn that into 10 and then 20. You get the point. I went on a tangent there, as I tend to do. I think you see that by now, but I think build to rent is a great way where you have predictability. Sometimes you can come into immediate equity with these things. So you may not have to wait 4 or 5 years to do a 1031 exchange. Maybe it's 2 to 3 years because you have immediate equity. And we know that in these markets, the properties appreciate quicker. And so that's maybe something to think about. If you're doing ground up construction, I said on here, one of the cons is 12 to 18 month build time. That's applicable if you're doing ground up construction. Most of the construction we're working with right now is basically, it's already done. So a lot of this stuff, when you look at the process and things like that, just ignore that. Just in build to rent in general, I think we get that. So here's an example of a property. This is outside of Orlando. This is a secondary market. So, we have areas that are strong growth potential. This could be used as a short-term or long-term rental. However, we just have data points on long-term rentals. This is sold below market value. Again, this is probably outdated at this point, but just to give you an example what a new construction investment property looks like. So price on this is $312,000. So if you're using conventional financing with 20% down, it would require $62,000 down to buy this property, whereas the previous example only needed $27,000 down because the property price is lower. But still, this one actually has 15% cash on cash ROI. That's just based on cash flow. So it would produce almost $500 a month in income, and it comes with immediate equity. So this house appraises for $355,000, and so you get 40K of immediate equity. This is a perfect example of and this is, don't expect every deal to be like this. Like, these are just examples. The point is the concept. Generally speaking, with new construction, you either come with some immediate equity or you build equity quicker in those because of appreciation in those type of markets, or both. But maybe you could 1031 this after 2 to 3 years and trade up and turn this into 2 investment or 3 investment properties to double or triple your cash flow. And you can see the interior photos are really nice. It's just a beautiful property. These are, this is not so much your bread and butter rental in the Midwest. This is a little bit more of a higher end property that is in an A-class area that is growing. So it's going to appreciate well. It's going to attract quality tenants, and you're going to have strong rental growth. So if someone had the capital to get into this as a first investment, I'd highly recommend it. This is a great way to go. So I'm just going to end on something that I always want to hit the point home of, why real estate is so powerful to invest long term. And of course, you've likely heard the IDEAL acronym that we commonly associate with all the ways that you build wealth investing in real estate over time. So why is real estate the ideal investment? And this is an acronym for the different ways that you grow your net worth and income over time. So I is for income. We're talking about cash flow. After all expenses are paid in debt service, you should have some money left over each month, which you can do whatever with. You can live off of. You can ideally maybe reinvest it if you don't need to live off of it. Eventually, the idea through early retirement is you will live off of the cash flow. And so, that's a lot of people stay hyper focused on cash flow as the main way to, like, that's the most exciting thing for them because it's tangible and they have the idea of like, okay, well, if I'm cash flowing $1,000 a month from this one rental, if I had 10 of those, it'd be $10,000 a month. I could quit my job and live off of that. Now that's true. But really, if we're talking big picture, all these other areas are the ways that you really build dramatic net worth in real estate. And this is what makes real estate powerful. It's actually less about the cash flow. But cash flow is important. And keep in mind, even when you're looking at a pro forma, cash flow goes up year after year. Your mortgage stays the same. You'll have a little bit of an expense increase, sure, year after year. But really, your rental increases year after year should increase your cash flow just owning rental real estate. So that's income, okay? Your cash flow, which you can live off of or reinvest, whatever you choose to do with it. D is for depreciation and tax benefits. Personally, I think this is the most powerful thing in investing in real estate because there's no other asset class that comes close to offering the same tax benefits that rental real estate does. I won't go deep into this now, but like, for example, for our personal investing, our goal, my wife and I, is always to buy enough real estate every single year to completely offset our taxable income. So not only we're not paying taxes because we have so much tax benefits to use from real estate investing from properties we've bought, we're also creating a negative loss year after year. So that doesn't go away. It parlays into the next year. And so we keep building up this negative loss year after year, even though we have positive income. Going back to cash flow, that's why we call cash flow in rental real estate tax-free income or tax-free cash flow. It's subject to taxes. It's just that you're not paying taxes on it because you have so many write-offs and expenses to offset the taxable income that you would pay on that. And that's dramatically impactful. If you think about that, if you had $100,000 of income from your rental property, that would be the equivalent, depending on where you live, state and federal taxes in your tax bracket, that could be the equivalent of $160,000 to $200,000 of earned income because that's actual take home. That's how powerful real estate is. And the IRS writes the tax code for real estate investors. These are not tax loopholes. The IRS is incentivizing you to be an investor and go out and create jobs and provide housing for people and stimulate the economy and do these things. And that's why you get these tax benefits. But there's no other asset class, stocks, bonds, commodities, crypto. There's nothing else that comes close to the tax benefits you get through rental real estate investing, depreciation being the big one. Just for example, if you own a $100,000 house, say you had $3,000 of annual income from that, just for simplistic purposes, just your cash flow, normally you'd have to pay, taxes on that $3,000. Depreciation alone will completely wipe out your taxable liability and create a loss, actually. So if you sell that property, your future income, like, you're not paying taxes on that. So for example, on $100,000 divided by 27 and a half years, which is the tax code, that's roughly like just $3,300 a year that you get to take as a tax deduction. Well, that means that you can earn up to $3,300 a year and not have to pay taxes on it just from your income. That's only depreciation. That's not talking about your mortgage interest, your taxes and insurance on the property, your managerial expense, any repairs you've done on the house. So, tax benefits are powerful. I'll stop there because I could go on and on, but it is quite possible to create, large passive income that you don't pay taxes on, and actually wipe out your taxes from all sources of income. We have multiple sources of income outside of real estate. And because we're real estate professionals and active real estate investors, we don't pay taxes on those because our income properties offset the taxable liability on those. It's extremely powerful because taxes are the biggest expense we're all going to experience throughout our life. And just think about for a moment, if whatever you paid last year in taxes, What if you didn't pay any of that to taxes, and instead of giving that money to Uncle Sam where you never see it back, instead you had a large portion of that, or potentially all of that you actually invested in real estate and earned an income off of and earned a return on that, and then bought another asset that then gives you additional tax benefits, right? Like that is extremely powerful. Okay, hit that point home. E is for equity, you guys. We are aware that we grow equity over time multiple ways in real estate. Specifically, what this E is referring to is the tenant paying the loan down. Based on an amortization scale, we are aware that every payment you make on a real estate that ideally the tenant's covering with their rent, you pay more and more principal. If you borrow $80,000 to buy that $100,000 property, well, after year one, now you owe $77,000 on it, and year two you owe $72,000 on it. Whatever the case is, that's building equity, and the tenant's paying that down for you. So that's building equity, just owning rental real estate, and that's huge. Another way you build equity is going down to the A, which is appreciation, and we all know that real estate appreciates over time, regardless of short-term fluctuations. All real estate goes up over time. Just inflation alone, I mean, real estate is the asset to own, where inflation can actually work towards your advantage, because inflation causes cost of living to go up, it causes appreciation, causes rents to go up. Also, if you're taking out a loan, like you're paying back your loan with less money because money is devalued due to inflation. You're paying the loan back to the bank with dollars that are worth less in the future, but your payment doesn't change. But appreciation, rent properties go up over time. So you're building equity through both the tenant paying the loan down for you and also the house price appreciating over time. And then, as we talked about, at some point, you can access that equity, either sell it in 1031 exchange it to buy more properties, take out a loan like a HELOC, a home equity line of credit, and reinvest that whenever the time is right to do that. Just another way you can scale your portfolio. And then L finally is for leverage. Leverage is what makes real estate the most powerful tool to invest, because you can borrow other people's money or the bank's money to own assets that produce income, and that you get 100% of the financial benefit from real estate ownership. If you're taking out a mortgage on a property where the bank is giving you 80% of the mortgage, but you own 100% of the property, right? So for example, and leverage is just so powerful. There is such a good thing as good debt and bad debt. Leverage is a tool. If you haven't read Rich Dad Poor Dad and The Cash Flow Quadrant by Robert Kiyosaki, that's your homework. You got to read those books. It is baseline fundamental to understand investments and leverage and how to think about money. But certainly leverage is a powerful tool. Think about it. If you had $20,000 to invest and you invested it in stocks, and those stocks went up 5% the next year, what's 5% of $20,000? It's $1,000. So now you have $21,000 and you earned a true 5% return on investment. However, using leverage, let's say that you have that same $20,000 to invest and you put it down on a $100,000 house. Now that house goes up that same 5% that next year, which is a reasonable appreciation. Actually, that's below most of the markets that we operate in. So that house is now worth $105,000. You have created $5,000 of equity through appreciation. We're not even talking about the tenant paying the loan down every year, which would add to this, but just based on appreciation alone, now you have $105,000. You have $5,000 of equity that you created. You only put $20,000 down on that property. So you earned a 25% return on your investment. Take $5,000 divided by $20,000. How much you've earned divided by how much you put in year one. That's how you calculate ROI. You would have achieved a 25% return on investment just by using the power of leverage. Again, that's just looking at appreciation. That's not factoring in cash flow. That's not factoring in tax benefits and depreciation. That's not factoring in the tenant paying the loan down, which you can clearly see how powerful real estate can be using leverage. And it's really about just how to use all these things combined to grow your net worth and to create consistent cash flow year after year to be able to provide financial independence. But it doesn't stop there. It's not just about financial freedom. It's about building a net worth that provides you with financial stability and also provides you with a legacy that you can pass on generation to generation, and then pass on not only the knowledge, but an actual physical portfolio that also has tax incentives, which we'll talk about at a later date. on how to maximize your tax benefits on passing this to generation. Guys, this is how the wealthy have been doing it for years. And again, there's a reason why 90% of millionaires made their money through real estate, and why there's more millionaires made every single day through real estate investing. It doesn't happen overnight, but it does happen over time. You just have to stay consistent to investing. You got to take action. You got to look at maximizing all these areas in the ideal formula to benefit in real estate investing. And we are here to help you and be your guide throughout the process and make sure that you're avoiding the obstacles that we had to go through to get to the point that we are, and sharing the knowledge and just paying it forward. So thank you for your time. I hope this has been beneficial. And if you haven't scheduled with an investment strategist at Rent Retirement to talk about your goals and criteria, please do that. We're here to help you. We're here to add value. And I guarantee you're going to walk away from that conversation with learning something that will allow you to be a better investor in the future. So thank you again for taking the time to make it through this presentation. And here's our contact information if you don't have it already.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.